Good evening, guys. How are you? Are we live already? Let me see. Let me make sure that we are live. It's 4:43 p.m. What's up, guys? Leslie Williams. Hello. Yes, you're first. You beat me in, actually. Good. Quantity 5S. Drew Bider. Michaela San Moore. Hello. What's up, guys? I hope for you guys who have had an amazing trading session. I didn't do much today. I got some Tesla puts. I locked in the profit very quickly. I left some money on the table. And I also locked in the profit on 75 shares of the SPY that I got last Friday. So we had an amazing green day across the board today, guys. Now the big question is this a bull trap? What do you guys think? Do you guys believe this is a bull trap, or are we going higher? The let's say the close of the trading session left some doubts on the table. So Russell 2000 went up today 2.65%. The Nasdaq goes up 2.27%. Dow Jones went up 2.66%, and the S&P 500 went up 2.59%. Since the Dixie, the US dollar went down today 0.42%. We had crude oil going up 4.74%. Crude oil went on an absolute tear today on news about the OPEC. The OPEC said earlier today that they might be cutting oil production over 1 million barrels per day, and there is actually an OPEC meeting on Wednesday to decide upon that matter. So we can expect crude oil related stocks to keep on outperforming in the upcoming days. Precious metals also went up. Gold went up 2.19%, and silver went up as well, almost 10%. Wow, silver went on an absolute tear today. So very good news for commodities and precious metals when the US dollar goes lower. The 10-year treasury yield, the worst enemy of growth oriented stocks, higher multiple stocks, and big tech stocks for that matter, went down today a lot, 4%. So, from a mechanical standpoint, we had the necessary ingredients for the markets to have an important rally, which is what we saw today. We can also make the case, guys, that one of the reasons why we had a very solid green day today was the Central Bank of England, because they, or I mean, not really the BOE or the Bank of England, but rather the United Kingdom, the UK government, because they announced today that they are not going to cut taxes as they said 2 weeks ago. So since they, let's say, dumped that tax cut, that obviously pushed the British pound higher, which went up today 1.39%. And at the same time, that price action put downwards pressure over the US dollar. So the bulls had the let's say, the mechanical factors to have a green day across the board today. And that's what we saw. When it comes to the sectors, another green day across the board. The only sector that almost closed in negative territory was consumer discretionary because of Tesla. Tesla got absolutely killed today. So consumer discretionary was the worst performing sector today, goes up 0.05%. And take a look at the energy sector, guys. The energy sector went up today almost 6% on an absolute term, followed by materials, goes up 3.2%. And when it comes to the most important sectors of the markets, technology went up 3.11%. Healthcare goes up 2.05%. And even the financial sector, which has been an underperformer throughout the year, went up today 2.67%. Look, guys, at the advancers and decliners of today's trading session. 5,216 stocks went up and 1,615 stocks went down. So usually when we see these kind of very exaggerated ratios, to either the green or the red. The next day, we saw the opposite happening. So, are we going to have a red day tomorrow? We need to wait until tomorrow to find it out. I want to show you these guys because we are kicking off today, not only the month of October, but we're also kicking off the fourth quarter of the year and a week, obviously, for that matter. So take a look at these guys. I want to read for you guys this Twitter. Listen up. October has been a turnaround month, a bear killer. 12 post World War II bear markets have ended in October. Listen up: 1946, 1957, 1960, 1962, 1966, 1974, 1987, 1990, 1988, 2001, 2002, and 2011. S&P 500 declined 19.4%. Seven of these years were midterm bottoms. So take a look at these guys. 12 bear markets have ended in October. And on top of that, seven in seven opportunities, we were dealing with midterm bottoms. You guys know that we have a midterm election now in November. So, from a historical standpoint, we can make the case that the bulls have a bunch of factors on their side. And keep in mind that also from a historical standpoint, guys, the very negative influence of September usually lasts until mid October. So we can make the case that from a statistical standpoint, we might still see some sort of downwards pressure into mid October. Full disclosure, I am short in Apple. I borrowed 100 shares a bit before the closing bell rang. And I also got SPY puts today, but if the price action happens to show me that I am wrong, then I am obviously going to be closing those positions. But I believe that we might still be seeing some sort of downwards pressure into the into October 15. And I also wanted to show you this chart, guys. Take a look at this. I know that many of you have unrealized losses over there. Many of you guys want to buy some stocks of good companies that, as of now, are showing very generous discounts from all-time high. So there is always another side. This is going to sound very bullish. I am also a long-term investor myself. So take a look at all of these bear markets, guys. I have over here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So over here we can see 11 bear markets and take a look at the returns that the S&P 500 has had once every single one of these bear markets ended, guys. So 1956, 86% return. For instance, 1973, 126% return after that bear market ended. Take a look at 1987, 582% return after that bear market ended, and so forth. So I think that you guys could take a screenshot over here and maybe do the math. Is this a good time to buy stocks that I like for the long term? So don't expect the markets to turn around very quickly in 1 or 2 weeks or 1 month. But if you buy good stocks right now, the most likely outcome is going to be that 1 or 2 years out, you guys are going to be in the green according to the historical information that we have handy. So let me see, what do I have over here? Curling Friday's payroll numbers. Yes, guys, keep in mind that on Friday we have the jobs report of September. In my opinion, that is going to be by far the most important report, the most important economic report that is coming out this week. Keep also in mind that the Federal Reserve has stated uh, on multiple occasions that they need to see the labor market softening. So if that report happens to come out better than expected, reflecting that the U.S. economy created more jobs than the expected number, I think that we are expecting 250,000 new jobs in the month of September. So if we happen to have a number greater than 250,000 jobs, that is going to be very bad news for the markets. And on top of that, you guys also need to keep a close watch on wage inflation. That is also going to be a very critical metric um, when it comes to the jobs report that comes out on Friday. So yeah, Caroline is absolutely right about that. The jobs report is going to be extremely critical on Friday. That is going to be a market mover, no doubt about it. Okay, guys. So Nike and Tesla are down. So let me go ahead and take a look, guys. Let me show you something that I found interesting over here, guys. So this is the S&P 500 before we go over some stocks. So check this out, guys. Over here, you guys can see last Wednesday's trading session, right? You know that that trading session ended up being a massive bull trap. And take a look at today's trading session. So the similarity is scary to say the least. So what happened on Wednesday? We went up, then we then we consolidated slightly above the 5-day moving average. Then we made a second push higher, and then we sold off into the closing bell. So this was on Wednesday. Take a look at what happened today. So we opened the trading session going higher. Then the bulls consolidated slightly above the 5-day moving average. Then we made a second push higher, and then we sold off into the closing bell. So, do you guys believe that these two patterns are look alike? They look extremely alike. So, if history happens to repeat itself, this might, or today's training session might be another bull trap. I find a bit concerning the lack of conviction that we saw into the closing bell. This is the same situation that we saw last Wednesday. So we pushed up a lot, and at the end of the trading session, we saw a massive sell-off because people were locking in the profit because they don't really believed on Wednesday that the rally could keep on going higher. And the same situation happened today. So this is a question mark that we have on the table. So Tesla, guys, what do you guys think about Tesla? Let me go over Tesla over here. Let me see if I have anything else to tell you guys. No, I think I'm good. Well, you guys know about the Credit Suisse situation. There are a lot of rumors out there that the bank could be in financial trouble. Let's just put it that way. And the CEO of Credit Suisse said earlier today, this morning, that they have a liquidity of $700 billion. He also stated that the bank isn't the stock. Because if you guys go ahead and take a look at Credit Suisse, a stock of this company, or at the stock of this bank, this is a penny stock, guys. Take a look at this, $4. It actually went up today 2.30%. So if we take a look at the stock, we could make the case that the markets are very concerned about the general situation of this Swiss bank. But at the end of the day, the CEO said, we're good. So there's nothing wrong going on with our bank as of now. So move on, guys. That's what the CEO of Credit Suisse said. So we can make the case that the markets today looked the other way when it comes to these concerns about Credit Suisse. Okay, let's go ahead and take a look at this, guys. Got killed today. I purchased I purchased one or two puts, I don't remember. And I ended up making $200 over here. So this is the 4-hour chart. We can see that Tesla is a bit oversold, actually very oversold. The RSI is sitting at 20 points. Very ugly looking chart. They cleared downtrend below all the moving averages. And the bulls couldn't hold today the 100-day moving average at $262. This is a very bad sign. We can also see a decline in 5-day moving average. So I'm thinking, guys, that if Tesla happens to be killed tomorrow, once the trading session opens, I am going to be keeping a close watch on $230. $230 happens to be a previous support back from early May, and this is also a previous support back from late February. So I'm thinking that if this stock happens to get killed once the trading session opens, and if we happen to see a quick visit down to $230, then the RSI of Tesla is going to be way lower, and that is going to increase the likelihood for the bulls of Tesla to find support at a previous area of support and then bounce back up. Another potential scenario, and this is a scenario that I am going to be that I am going to be observing in order to get put once again. Watch out for $250, guys. $250 is a previous resistance back from late June, and this is also a previous support back from mid March. So if we happen to see a test of 252 bucks ish, and if that test happens to be a failure, then we might be grabbing puts over here. We didn't get we didn't get bad news about Tesla necessarily when it comes to the deliveries of the second quarter of this year. However, guys, this is a very expensive stock. The P ratio of Tesla is sitting at around 300 points or something like that. So, despite the fact, if you guys do the math, so the deliveries from Q2, sorry, the numbers that we got yesterday were the deliveries for Q3. So, if you do the math, guys, the deliveries of Tesla went up 100,000 vehicles from Q2 through Q3. So that's obviously very positive. However, the deliveries came out below estimates, and since this is a very expensive stock from a valuation standpoint, this is a stock that is for the most part priced into perfection. Then the markets were like, no, 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 I don't like it. You need I am paying a very high a very high multiple over here, so you need to be perfect. That's the problem when we invest or when we trade higher multiple stocks. When a stock is priced to perfection, guys, then that's an issue. Every single earnings report has to be perfect. We cannot have any bad news coming out, because if that's the case, then that stock is going lower, right? So that's the situation with Tesla as of now. This is a stock that is priced to perfection. The news about the deliveries wasn't bad news, but the markets are obviously not happy at all with the fact that the deliveries came out below estimates. So watch out tomorrow for a potential rejection at 251 bucks, or watch out for a potential support and a potential bounce back up from $230, 231 bucks per share. Let me go ahead and take a look, guys, at the market structure of Tesla. How is it looking like? Let me pull it up here. This is very important, guys. Supply and demand. This is something that the technical charts don't show us. And I use this website, Market Structure Edge. So what do we have over here? A very poor market structure, guys. Take a look at this. 1 out of 10, the market structure sentiment. And we have a collapse in demand and a falling and an ascending supply. So the market structure of Tesla doesn't look good at all. So I'm thinking that if we happen to see a test of 251 bucks, the sellers might be taking control, or the sellers might be rejecting the buyers at $251 per share. And now let me see what other requests do I have over here, guys. I'm sorry, I got a telephone call. Let me see. There you go. What is my live streaming at? Hold. Okay, let me pull it up here again. I lost it. There you go. Is a Credit Suisse stock news something to worry about right now? I don't think, Isaac. Um, we can make the case that if something goes wrong with Credit Suisse, we are going to see a bunch of American banks involved, probably. But as far as we know, guys, the CEO said that there's nothing wrong with the bank, and the stock of this Swiss bank actually went up today. So the markets are looking the other way as of now, and yeah. So let's hope for the CEO to be telling the truth, guys. Because if that bank, that's an important bank, guys, in Europe. So if something goes wrong, we might see some important banks over here being affected. So yeah, that's definitely something that we need to keep a close watch on. Netflix for calls. I was going to take it, but I'm going to wait to see what tomorrow brings. Yeah. Okay, let me ask you something, guys. What do you believe? Was today a bull trap or not? What do you guys think? I am doubtful about the continuation of this rally. Let me go ahead and take a look at Netflix. And someone asked me about Netflix earlier on today, and I'm thinking, guys, that there's a big spot coming up for Netflix, $252. $252. The Bulls already failed on one, two, three, four, and five occasions. This might be a spot in which we might be grabbing puts. I am actually going to create an alert here, guys. There you go. Let me see. Price markets at or above. I am going to create an alert here, guys. I think that this is a short. If we happen to see a clear rejection of the bulls of Netflix at around $253, Netflix went up to the 1.53% and it closed the trading session at $239.04. As of now, it looks like apparently the worst is behind because Netflix is way off the lows. This stock bottomed out. This was back in early May at $160. As of now, Netflix is above the 100-day moving average. The bulls already reconquered the 180 SMA on the 4-hour chart, and we have a semi ascending 5-day moving average, and the bulls closed the trading session today slightly above the 5-day moving average at $235. So I'm thinking that if the bulls can hold $235 as support, that might be a sign that they are gathering momentum in order to make another push higher and potentially being able to fill this gap up to $253, in which in normal market conditions, I might be grabbing some puts. The RSI is sitting at $55. So if the rally keeps on going on tomorrow, guys, and if Netflix respects the support of $235, we could go on here up to $253. And mind you, take a look at the 200-day moving average, guys. This is by far the most important moving average out of all of the moving averages. So we have a clear descending position. So until the bulls burst above this 200-day moving average, or until at least this 200-day moving average starts to flatten, the sellers are in control of this technical short, guys. So $253 is very likely to be a very tough spot for Netflix. And if this support of $235 happens to be held, then this could be a trade from $235 up to $252. We are looking at an 8% profit trade, nothing to sneeze at. Let me take a look at the market structure of Netflix over here. Let me see Netflix. What's the market structure looking like? Let me see buyers and sellers, supply and demand. 3.4 out of 10 would be the market structure sentiment, and we have a fall in demand that is below the supply. So this is not the best market structure that we can see. So watch out for these two levels, guys, either $234 or $250 per share over here on Netflix. Ranju Gupta. How do you see DBX? Let me go ahead and take a look at DBX. Okay. Let me see. DBX Dropbox. Wow. To $21.27. So Dropbox went up today 2.65%. Wow. The stock of this company has gotten some love, right? The bulls reconquered today the 50 SMA on the 4-hour chart, and as of now, we can see a semi ascending 5-day moving average, which is a very good sign. I'm thinking that the next gap over here is going to be up to the 100-day moving average, $22. So, and as I just told you guys, in the case of Netflix, if the rally keeps on going on tomorrow, watch out for dropbacks filling this gap from $22 ish up to the 100-day moving average near $22. This would be a 3% profit trade. And take a look at the 200-day moving average. It is in a declining position. And as of now, we can also see over here a death cross with the 50 SMA crossing below the 180 SMA on the 4-hour chart. This is a bearish sign. So for me to be comfortable taking a trade on Dropbox, I would rather seeing the stock of this company bursting above the 180 SMA on the 4-hour chart, and by doing so, invalidating this death cross, which is a bearish signal, and preferably, I would also like to see Dropbox bursting above the 200-day moving average at $22.58. So we have encouraging signs over here. RSI at 59 points, very healthy from a technical standpoint. Dropbox is neither oversold nor overbacked. We have a semi-ascending 5-day moving average. The bulls reconquer the 50 SMA on the 4-hour chart, but we still see a death cross, a clear death cross over here, and we have a declining 200-day moving average. So if you are going to take a trade on Dropbox, you have to be careful. Let me take a look at the buyers and sellers of the stock of this company, Dropbox. Let me see. What do we have over here? Let me see. 1 out of 10, very poor market structure, guys. We have a non-existent demand, as you guys can see over here. Remember that the blue shaded area is the demand, and we have a supply that is way above the demand. So not a good looking market structure for Dropbox. I would be careful with the stock of this company. There you go. Etsy, quantity 5S. Let me take a look at Etsy. Deborah Hernandez says metals and BTC is up. Yeah, BTC is up after hours, I think, right? Let me see. It has found a very strong support at 19,000. Yeah. Yeah. This is a very strong support for Bitcoin, guys, and at 19,000. And if 19,000 happens to be taken out, 18,500 bucks has been doing the job, acting as support over here. Etsy. I haven't taken a look at Etsy in quite a long time. Let me see what is going on. And the case Etsy goes up today 4.85%, and it closed the trading session at $104.99. Well, take a look at how the 100-day moving average acted as support, guys. Beautiful. At 94 bucks, it acted as support on 3 occasions. Etsy is now dealing with the 180 SMA on the 4-hour chart at $107, with the RSI sitting at 63 points on the 4-hour chart. So this is an encouraging chart, and we also have a semi-ascending 5-day moving average. So watch out for Etsy, guys. If the bulls, and obviously if the general rally that we saw today continues tomorrow, if the bulls can take out this 180 SMA on the 4-hour chart, they have room up to the 200-day moving average near 118 bucks, which happens to coincide with a previous resistance back from mid-September. So this would be a breakout trade that if we happen to take in a successful way from 108 bucks up to 115 bucks, this would be an 8% profit trade. Very, very interesting chart over here on Etsy. Let me take a look at the market structure. So this is a stock that I might be willing to take a trade on tomorrow if, as I just told you guys, the rally continues. Yeah, the market structure is a bit poor. We have a fall in demand that is way below the supply. But regardless, if this 180 SMA happens to be taken out tomorrow, I might be going long on Etsy. Interesting chart. Thank you very much for the suggestion, bro. 1TD5S. Cameron Moses, what are your thoughts on the Dow Jones DJI? I don't really track the Dow Jones, guys. To be honest with you guys, the DIA. Let me take a look at the. Um, let me take a look at the. There you go. Let me see. I don't have the DJ. You said DJI. Let me see the Dow Jones. You have the Dow Jones here? No. Let me see, guys. I am not familiar with the ticker symbol of the Dow because I don't really track it. So what is that? What what is the ticker symbol of the ETF, guys? It would be DIA, right? Let me see. No, it's yeah. There you go, Dow Jones. So this is the ETF. Um, I would say that in the case of the Dow, guys, for the Dow to be out of the woods, the bulls need to reconquer the June low at 297 bucks. Yeah. So this is a very important support. It was taken out by the bears, and the Dow or the DIA found support at 285 bucks. Today, the bulls managed to burst above the 50 SMA on the 4-hour chart, which is some sort of a good sign. They still need to burst above. They still need to take out the June low at around 298 bucks. Very ugly looking chart, guys. Declining moving averages below the 200-day moving average. 100-day moving average. We can clearly see over here a death cross with the 50 SMA crossing below the 180 SMA. We can also see a decline in 5-day moving average. So I would say that some aspects in favor of the bulls would be the fact that they reconquered today the 5-day moving average. So good job over there. And they also reconquered the 50 SMA on the 4-hour chart. But watch out for the $296, guys. If the bulls failed at taking out $296, this would be a short once again, guys. And this would be a bad sign at the same time for both the S&P 500 and the NASDAQ 100, because out of all of the major indices, this is the one that is looking, yeah, the worst. Absolutely. Let me take a look. Take a look at the Russell 2000, guys. On the flip side, the Russell never hit the June low. Take a look at 1,641 points. So this was a good sign for the bulls. And today, in the case of the Russell, the bulls actually managed to take out 1,700 points, which happens to be a previous support back from early May. So on one hand, the Russell 2000 is showing some sort of a strength over here, but on the other hand, we still need the Dow Jones or the DIA to take out the June low. Thanks. That's what I was looking at. There you go. So we were looking at the same stuff. Speaking of Missy, Google, Alphabet. Okay, let me take a look at Alphabet. I purchased 200 shares of Google, guys, like 2 weeks ago. I am holding the bag, but that's fine. I am not concerned at all when it comes to Google. Obviously, Google went up today 3.28%, and it closed the trading session at $99.30. And take a look at how the 50 SMA has been acting as resistance, guys, on the 4-hour chart. So right at the 50 SMA, the bulls failed today. The bulls also failed back on September 27th. They also failed on, let me see, this is August 25th, and they also failed back on August 19th. So they have failed at the 50 SMA and the 4-hour chart on 4 occasions recently. So we are talking about a very important resistance over here, right at $100 directly. So if the bulls can take out $100 tomorrow, we have another, or the other gap that would be being filled over here is up to $105, which happens to be a previous resistance back from mid-September. And at the same time, this is also a previous support back from late July and also back from late May. So this could be a breakout trade, guys, if the rally continues tomorrow, if the rally keeps on going on tomorrow. So from $100 up to $105 ish, we are looking at a 5% profit trade. Take a look at the RSI of Google or Alphabet on the 4-hour chart, 53 points, very healthy from a technical standpoint. So Alphabet is neither oversold nor overbought as of now. But mind you, guys, and what I am about to tell you goes for every single stock that I have gone over during this live streaming. Major downtrends below all the moving averages. We have declining moving averages. So all of these stocks are guilty until proven innocent. Be careful. Be very careful. So if you want to start any given trade with any of the stocks that I just went over, you need to have an exit plan. You need to apply stop loss because sellers are in absolute control of every single one of the stocks that I have broken down for you guys in today's live streaming. Let me take a look at the market structure of Alphabet. Let me see. There you go, Alphabet. I wanted to buy calls, guys. And since this technical chart is absolutely broken from a technical standpoint, I was like, now I'm gonna pick up 200 shares rather, so I don't need to deal with the decay aspect of call options, right? So I'd rather buy shares, and now I have the possibility of selling covered calls, which I haven't done, but that's a possibility that I have on the table. So the market structure of Google, terrible, guys. Take a look at this. The market structure sentiment, 1 out of 10. We have a non-existent demand, and we have a supply that is way above the demand, not a good looking short. So, guys, in summary, the sellers are still in absolute control of everything. 99% of the stocks out there. Needless to say, the major indices. Take a look at the S&P 500, guys, just to set an example over here. Take a look. So major downtrend below all the moving averages, a declining 5-day moving average, below a declining 200-day moving average, 100-day moving average. We can also see a death cross over here with the 50 SMA crossing below the 180 SMA, the 180 SMA on the 4-hour chart. Very ugly looking short. So we have to be careful. In my opinion, I think that the second half of October is going to be positive. I could be mistaken, obviously, but we're dealing with a very tough bear market. And if you guys want to take trades here and there, you have to be careful because the sellers are in absolute control of, as I just told you guys, like 99% of the stocks of the markets over there. Cameron says that we're going to see a rally until Wednesday. Could be. And um, any rally that we could see throughout this week is going to depend on the jobs report that is coming out on Friday. That is going to be absolutely critical. And Dominic is telling me to go over DraftKings. I haven't taken a look at DraftKings in quite a long time, guys. Let me see over here. Wow, this is a chart that is starting to look way better, right? DraftKings went up to the 1.72% and it closed the trading session at $15.40. And take a look, guys. 100-day moving average, guys. The two most important moving averages out of all of the moving averages are the 200-day moving average and the 100-day moving average. Take a look at how the bulls held this moving average as support on multiple occasions recently, which is a very good sign. We have a 5-day moving average that is starting to look better. Let's just put it that way. The RSI is at 47 points, so that's very healthy. We can make the case that DraftKings is neither oversold not overbought. So the bulls are as of now slightly below, sorry guys, this 5-day moving average at $15.40. So watch out for a burst above this 5-day moving average because in that case, the next important gap for DraftKings could be up to $17.13, which happens to be a previous resistance back from mid-April. If the bulls of DraftKings were able to make this push to the upside from $15.50 each up to $17, this would be a 10% profit trade. So this is going to be a runner, guys. If the rally continues tomorrow or on Wednesday, I think that once the bulls of DraftKings take out this 5-day moving average near $15.45, they are very likely to be off to the races. And as I just told you, take a look. Declining 200-day moving average, which has acted as resistance on two occasions. We can also see over here a death cross with the 50 SMA crossing below the 180 SMA and the 4-hour chart. So this is an encouraging chart. But this doesn't mean that we are going to go all in DraftKings because the sellers are still in control of this technical chart. And let me take a look at the market structure of DKNG. Let me see, what do we have over here? So 1 out of 10, and we have a very poor market structure with the demand falling and the supply going higher and way above the demand. So as you guys can see, when we reconcile, guys, the technical charts with the market structure of all of these stocks, we can make the case that the sellers are still in control. So that implies that we have a greater supply relative to the demand. So be careful out there, my boys and girls. There you go, guys. I think that we are like 40 minutes in. So I am going to wrap it up. I am going to go live for you guys. Yeah, almost 40 minutes in. Remember that on Thursday, I am going to be live streaming with Mario. So remember to join us on Thursday at 4:40 p.m. So thank you very much for hanging out with me today. And see you guys on Thursday. And tomorrow, obviously, we're going to be in touch in the main chat of Chris Saint's Discord. So take care, guys. Enjoy the rest of your day. And thank you very much once again. Okay, bye. Take care. Enjoy the rest of your day. Let's see if the rally continues tomorrow. Bye. Take care. See you.